the Fed more nuanced than ever.
You can say that. In new terms coming up, I guess they're getting more creative, Sherry, as the complications around what they're going to do next, what they're going to do at the June meeting with that interest rate hike or not, gets a little more complicated too. Philip Jefferson making the case of the doves. It's time to pause. He says that it can take a whole year for the impact of interest rate hikes to work their way through the economy. He also talked about the fact that you need time to assess how much banking turmoil leading to tighter lending standards, consumers, households not being able to get the loans they want, what that's going to mean for the economy. Let's move on to the other side of the coin. Let's take a look now at Jim Bullard. Jim Bullard is saying that disinflation is moving slower than I would have liked, and that he'd like to see rate hikes as insurance against inflation. Our main risk, he says, is inflation doesn't go down or even turns around and goes higher as it did in the 1970s. The Fed thought they vanquished inflation. They hadn't. They had to do more. 1980s classic, 82 they stopped hiking rates. They thought they were done. They weren't. 1984 they hiked so much they pushed the economy into its deepest recession since the Great Recession, or Great Depression, I should say. Now let's take a look at Lori Logan. I think Lori Logan is shifting more to the hawkish camp. She's the president of the Dallas Fed. And when she was talking today, she talked about, well, I'm not so worried about tighter credit conditions and having to see what they're doing, because it's been going on for a while. It's been going on since last year because of Fed rate hikes. That's making conditions for lending tightening. Then she says, the data in coming weeks could yet show that it's appropriate to skip a meeting. As of today, though, we're not there yet. Skip a meeting. What do you mean? You mean don't meet? Instead of having a meeting, you're just going to sit home and talk on the phone? I'm being a little bit sarcastic here, but I think what they're talking about is what Raphael Bostic is saying, and he's the one who we first heard this term skip from on Tuesday, and he said that they could, if they're going to pause, it could be a hike or a skip. So this is, I think, making us wonder, what are they talking about? I think what they're talking about is the fact they may want to say, look, we are still inclined towards rate hikes. Bostic already said last week that he would hold his vote for a vote, I should say, if he had to decide today. And but he still thinks if they move again, it's more likely to be a hike than a cut. So anyway, it seems to me this is a way to keep the door open to hiking, make it clear that you're not done hiking unless inflation is going to stay low. Anyway, it's getting kind of confusing. I think it's hard to explain because they haven't told us yet what they mean, but it's pretty interesting that two Fed officials said it.